Welcome to TheoTRADE. This is Don Kaufman. It's November 10th, 2023. Just about 30 minutes left inside of this trading week on a Friday afternoon. The markets, once again, explosive with movement to the upside. S&P is presently up some 65 handles. Tell you what, the follow through in this rally is just absolutely immense. Like, look where we came from. Literally 2 weeks ago, trading down at 41.25, now trading roughly 44.25. Yeah, what's 300 S&P handles amongst friends, all in the span of 2 weeks. Look, what we're going to discuss here on this weekend's update: magnificent market moves or a high stakes gamble. The reason I actually call a lot of this into question, it's a lot to do with what we're going to discuss in the Fed, bond markets, bond auctions over here. There is plenty to discuss in this marketplace. Look, let's get to work. I think the first place we want to take a look at, none other than the SPX and the expected move. Something I was talking about on Wednesday night has really kind of come to fruition, and that's this. I mean, by Wednesday, we had done basically absolutely nothing throughout the course of the week. On Thursday, with some sell-side activity, okay, and today, just bam, right, explosive move to the upside and a huge amount of gamma risk. And right now, we're actually closing in on the upper edge, again, the upper edge of the SPX expected move. You know, if you had asked me that even earlier today, would we be sitting just shy of the upper edge of the expected move? I would have said, no way, probability is totally against it. Look how close we really are. Again, the upper edge of that expected move, and just zooming in so you can see it, is roughly smack on 44.20. We've traded just shy of it. Again, you're within 10 S&P handles of hitting the upper edge of the expected move. Meanwhile, we started today's trading session. I want to make this clear. Started today's trading session. The S&Ps yesterday closed below where we started the week. Okay, that's how explosive this move really is. Again, on top of much more explosive moves. One of the largest breaches of expected move, of course, last Friday to the upside. Nevertheless, let's start to break down some of the trade over here. As I said, it's magnificent market moves. Of course, that's a little shout out to the Magnificent Seven, which is it's all about Microsoft here. You take a look at Microsoft, the runaway freight train to the upside, and you can see a whole lot of algorithmic order flow driving this marketplace. And I say that simply because it's one of the most linear moves we've ever seen. And throughout the course of trading, we've seen a tremendous bid under some of the calls in here, which is, again, indicative of, if you will, it's like the markets are just attacking to buy calls in Microsoft, driving gamma, and in effect, causing market making firms to have to buy stock. So you go out, you buy a ton of calls in Microsoft, the market making firms sell you those calls. In turn, they have to actually use stock to hedge, and away we go. I mean, again, it is an explosive, gamma, terrific move right now to the upside. But before we go too deeply into this, and before we get too excited about some of the Magnificent Seven, I was looking very specifically at some data, which I'm going to show you here momentarily. I first of all was surprised to see markets turned around today, and they correlated to the upside. Okay, now time out for a second. That, people, stands in very stark contrast to any of the trade that we've seen recently. And this is basically the entire marketplace just turned around and like, all right, everybody threw in the proverbial towel, buy everything at any price. Even stuff like the financials. And I wanted to show this because the financials throughout the course of this week, they've been nowhere. They've done absolutely nothing, but they caught a bid in this marketplace today. Moreover, if you take a look at the energy sector, in fact, I just placed a trade in the energy sector, but if you take a look at the energy sector from a expected move point of view, I mean, these things got smashed lower. And when I say the correlation has really changed, I mean, today the correlation factor just really kicked in and the markets are flying to the upside. But you have to recognize the entire rally this week, the entire rally. Has the energy sector been there? No, the energy sector is getting demolished. Right? Today, the energy sector has a bid under it. As I was saying about the financials a moment ago, the financials, they haven't gotten demolished, but they haven't been up throughout the course of this week. Today, all of a sudden, we're correlated. Everything is great. Okay. But really, when it comes down to it, it's the big tech. It's all about big tech. And again, if you look at Microsoft in terms of auto expected moves, like 2.5 sigma move, another like almost 2 sigma move over here. Everywhere you look, the breaches of expected move are absolutely phenomenal, statistically improbable, if you will. Now I'm going to show you one other area, and this brings in the second bullet to this weekend's update, and that is pay very careful attention to NASDAQ expected moves. In this case, I'm going to jump to the QQQ, and I want to show you very clearly. So the Qs have moved from roughly 345, let's call it, to 378 and change, right? So look, you can just call it what you want. It's about a 10% move to the upside. In fact, one of the easy ways to do that, just throw a drawing tool on this, okay? And we just draw from point to point over here, okay? And again, you get this it's over a 10% move to the upside. Neither here nor there. That's not typically what I look at in terms of a trade. Okay, in terms of trade, I like to put everything in terms of expected moves. And the reason I like to use expected moves, I'm going to spend a minute on this because I think it's so essential to understand trade moving forward, is that the expected move is how the option marketplace is handicapping risk. Okay, so if you look at expected move, it's like a standard deviation, right? So you have a little standard deviation curve and you're supposed to stay inside the range, 68% of the time, yada, yada, yada. Okay, so that's what these 3 lines are on your screen. And if you look, like last week, it totally shattered the expected moves, 2 times the expected move. Okay, this week shatters the expected move to the upside. But you realize even the week prior to that broke the lower edge of expected move. The week before that broke the lower edge of expected move. Okay, we're basically at this point, okay, we're seeing week in and week out markets, okay, specific to NASDAQ are way outstripping what they were expected to move. And the way that I put this into some context is, okay, the markets right now, specific again to the QQQ, the NASDAQ, it's totally unruly. And when you're starting to see, consecutive moves where like we breach by, 2 or 2.5 standard deviations, and then, another week we breach to the upside, like these phenomenal moves, I look at it very differently. It's a marketplace that's like incredibly efficient, and right now it's almost getting like ripped apart at the seams. You don't trust a marketplace like this. Okay, when I say it's a high stakes gamble, yeah, you better believe it's a high stakes gamble. I don't care what any proponent wants to say. Okay, it's a high stakes gamble at this point, purely predicated on the idea of how significant, okay, and consecutive weeks we're smashing through expected move. And you can look at a lot of markets, okay, and you can find markets that are moving, through expected moves, but not to this extent and not in a major index product. Right? So we cruise back over to the SPX because in the SPX, all right, we're also seeing some, fairly unruly moves, right? In the SPX, we breached lower mildly, we breached lowered mildly, massive breach to the upside, like 2.5 standard deviations. This week, though, it adheres to it. The NASDAQ right now, though, is the unruly product. And that's where you really better keep eyes on it right now, because I am telling you, you are going to get some wild and woolly reversals coming up here. This is not, okay, people look at this and they go, oh, it's this incredible bullish move. It's not a healthy move to have one-sided, moves like this, because what you're getting is maybe a little bit of a short squeeze. People are covering their shorts at the bottom over here, turns into this, what we would term like a gamma squeeze, where all of a sudden, market makers are not only covering, people are going out there and buying calls and forcing markets higher in products like Microsoft. And that's when things get completely and totally unruly, where it just starts to feed unto itself. Now, is this a bullish or bearish, connotation? Yeah, a little bit. I think you have to be careful on either side of the marketplace. But there's no question that correlation kind of kicked in over here, which again is thought of as being, oh, this is just incredibly bullish. It is until it isn't. Again, the breaches of expected move, in my opinion, are far too significant, and this is a marketplace that's in trouble at this point. And I think you're going to see some heavy volatility, return to the marketplace, possibly on some of the data this week. Now, that's why I wanted you to pay careful attention to the expected moves in the NASDAQ, because the way I see it, it's a marketplace that's just, as I said, unruly, getting kind of ripped apart at the seams. Now, the next thing that really started to kind of play a role in my mind was Fed speak throughout the course of this week. So everybody wanted to hear Fed speak throughout the course of this week. And that's wonderful. And what did the Fed speak do throughout the course of this week? Well, ultimately, okay, the market sold off significantly in a very, very short period of time. Now you're looking presently at a 30-day 1 hour. Again, a 30-day 1 hour. This little blip on the radar screen right up here, okay, that's some sell side activity in very, very short order. In fact, we'll come down all the way back to the 1 day, 1 minute and kind of zoom in on this. All right, there's two things that actually occurred yesterday. And again, I'm going back to Thursday for the express reason is the S&Ps on Thursday were down 40 handles. All right, they dropped 40 handles. They rallied back a little bit. They were down 34 at the close. Okay, all of that is erased in today's trading session. I mean, look, right now we're reaching for the upper edge of the expected move, and we might make it in the next 18 minutes of trade. But the first thing I want to bring up, the Fed speaks, okay? I say the markets don't listen. The markets did listen. The Fed was incredibly, incredibly hawkish, okay, in the commentary. Specifically, this is Jerome Powell. There was a lot of Fed speak throughout the course of the week, but the only thing that really mattered was Jerome Powell. But, okay, I'll discount Jerome Powell for a moment. I think what the marketplace was really paying attention to yesterday, and this is a fairly precipitous drop. And again, just to show you, S&Ps were trading roughly 4,400 minutes, just minutes later, we're trading 43.75. How many minutes? Okay, well, it's a 1 minute chart. You're less than basically 5 minutes and 25 S&P handles. So there is volatility clearly left inside of this marketplace. Okay, but the scary part of this is, okay, when we stop paying attention to the data coming out, we stop paying attention to the Fed, okay, we're just caught up again in this like magnificent kind of squeeze to the upside. But the point I'm trying to make with this is I couldn't tell you the Fed speech that was dropped into the marketplace was exactly at 2 p.m. on Thursday, that's Eastern time, as well as the bond auction. The bond auction yesterday did not go well. So I'm going to caution each and every one of you. You have to know now that bond markets, okay, this is really going to make a dramatic difference in the next week of trade. And we are going to be involved in very, very heavy data next week. So here, this is the bond market on the exact same announcement. You call it what you will. It's Jerome Powell that moved it. I don't think so. I think it's the bond auction. It was a very poor bond auction. Again, we were trading almost, again, 114, dropped all the way to 112 and change. It's a very precipitous drop, though, in an extraordinarily short period of time. You got to realize when bonds are moving a full point inside of 1 minute, you got to be concerned at that point. And moreover, the thing I think that's disconcerting, that's why I was kind of commenting that this high stakes gamble and kind of questioning it, you should question it as well, because the bonds reverted back down yesterday. They're not really rallying today. In fact, the notes are even off. Okay, we are in a very bad position in the bonds right now for the equity markets. So again, as we rally into this and everybody's just buying into that rally, okay, keep your head in the game. Keep your head in the game, take limited risk. I'm not actually bearing up right now. I am selling out of the money premium. I'm selling out of the money call premium specifically in the S&Ps because, well, we've had a 300-point rally, right? But I'm not sitting here trying to bear up on anybody right now for the S&Ps. But I'm going to tell you again, unruly moves like this coupled with the bond market, I don't feel good about that because the bonds are paused just to break right back down to the downside. And if they do, okay, believe me, they're coming for your Magnificent Seven in a, well, magnificent way. So as I was saying, the Fed speaks, markets don't listen. Bond markets, they're absolutely critical. And the reason that bond markets are going to be so critical is that this is going to be a big economic data week coming, right? We've actually got CPI coming out on none other than Tuesday morning. That's November 14th. So on Tuesday morning, you get CPI data. Ooh, that is going to rock markets. Okay, there's all kinds of data, everything from like Empire State to manufacturing. Okay, there's retail sales. I mean, we are chock full of data points that, again, are going to be catalysts. This is just going to be like throwing chocolate-covered hand grenades throughout the course of the week into an already heated marketplace. And again, say what you will about the markets. I don't care where the VIX actually collapsed to. People, this is volatility. This is volatility. You're getting, 2-3 weeks of just wild down moves pop right back to the upside over here. It's not a comfortable place to be, okay, on either side of trade. I don't care whether you're bullish, whether you're bearish. I guess if you're bullish, you're high-fiving one another right now. The bears were high-fiving each other just 2 weeks ago. Again, you got to be extraordinarily careful because this is going to be a week of just binary event after binary event. As I said, just loaded with data. I mean, you name it, and it's pretty much coming out this week. But the main event is probably CPI, which, of course, the Fed is going to be looking at substantially. I mean, they literally said they're data dependent, gave nothing else but that. So with that, again, not exactly a warm and fuzzy feeling that I'm providing you on this weekend update, nor should you, all right? I mean, there's nothing to say other than, look, you've had an explosive move to the markets. We turned around and correlated everything. It's all engines go to the upside. I don't like the look of the expected moves in the NASDAQ, too many breaches in a row. Look at this. We're reaching right now for the upper edge of the expected move in the SPX with just 12 minutes left in the trading week. Can we get there? This is awesome because think about how many weeks in a row you're 1, 2, 3, you're looking at like 4 weeks in a row that we're closing at, okay, or above an edge of a expected move here. Phenomenal markets. All right, last, but definitely not least. So the SPX, which I often term the mother of all products, its expected move, as we just, denoted a moment ago, it's everything. Like, look at the markets drawing towards the lower edge of an expected move, drawing right towards the lower edge of the expected move, like on a Friday afternoon. Another Friday afternoon tries for the corner and missed. Obviously, last week we exploded through it, 2.5 standard deviations. But here we are on a Friday afternoon, drawing right into it. And that's what gamma risk does in this business. But here's the really critical part. The expected move this week, okay, was plus or minus approximately $62. Did we hit it? Well, give us a couple of moments. I'm actually going to go ahead and call this, it's a hit. Why am I calling it a hit? Oh, come on. All right, let's not split hairs because here's the expected move at 44.20 and we traded 44.17. I'm going to give it to it. It's a $4,400 product. What's less than $3 amongst friends? Nevertheless, if we start to look at next week, now next week, okay, we have a primary expiration, which is the monthly AM settlement, but the expected move that we use is off the PM settlement. Roughly speaking, what is it? Slightly higher than this week. And that makes sense. So even though we've had this rip and rally, and you think that volatility collapsed, volatility actually is not collapsing. We're still looking at about plus or minus about a $64 move. Now, again, that's not settled yet. That wouldn't be settled until about 25 minutes from right now. You would actually have the official expected move. It's going to come in, though, very similar, okay, to this last week of trade, just over $60 of anticipated movement throughout the course of the week. And clearly, okay, we're enabled to be able to do that. I mean, look, people, we're at 70 handles of movement right now with still a few minutes left on the table over here. So again, what's really driving markets? Of course, it's the Magnificent Seven. It's Microsoft. Okay. Hey, what better to hit, almost $3 trillion if you hadn't seen the market cap of Microsoft here. You are actually sitting again just shy of well, it's 2.75 trillion. And then you look over at Apple, oof, they are neck and neck once again. You're getting nothing really in this marketplace as the primary drivers, but nothing less than Microsoft, which, as I said, one of the most explosive moves that we've seen kind of in recent history of anything of this magnitude. Again, just shy of a $3 trillion market cap. But you got to be careful with those unruly moves inside of the NASDAQ here. Look, okay, bond markets are going to be critical throughout the next week of trade. Keep your head in the game. Just because the VIX has gotten a little bit lower down in the 14 handle doesn't mean that volatility is over. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.